Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is going to be the mini S&P 500 futures contract front month in nature for this Friday, the 9th day of July 2011. And looking at a huge gap down, very impressive gap down. We've actually tried to fill the gap, but lo and behold, when we get these big moves that we've seen today, we're always going to get that kind of bottoming, basing formation right into until we reach the trend. And when the trend, which obviously is lower, comes smack dab in the middle of that, I mean, you can have a quiet session, but certainly the bears reign supreme. If you look at our proprietary indicators here, our intraday dynamics, as we refer to them, you can see the bears are in total control. Looking back, this is of course Thursday, and as you can see, green means the bulls are in control, red means the bears are in control, and you actually had accelerating bullishness in several indicators yesterday, Thursday, and you had a higher market. You had a market that closed near the upper echelon of the day's trading range, and if you scroll back just a little bit more, you can see very little indications right here, very kind of choppy indications. Lo and behold, it's reflected in price. Very choppy price movement on this day, and lo and behold, the day before, the day prior, this was the first beautiful up day. Beautiful up day. The bulls reign supreme again, so they've done that a lot lately. The move that we've seen, we'll take a look at the daily chart of the market in a second, has been absolutely, we've referenced it in the videos, absolutely impressive, awe-inspiring, and today's really the first selling day that we've gotten. Why do we get the selling day? Well, we actually have been mentioning to our clients that this area has been a key sell level in the market, essentially Wednesday's high. So we'll call it around 1337.50 to 1340 actually is in the key level in the cash, is a key sell level. You definitely want to book some profits, go ahead and add some short exposure to the market, even though officially we do remain bullish on the market. Our official market stance is bullish, as you can see in the emails. But having said that, you can see now that we're getting the move back. We had the errant day yesterday. Just an opportunity to add some additional bearish exposure, because when this happens, you're going to get errant moves. Now, it's not to say the market's not going to move higher by the end of the close today. Likely not, but given the overwhelming indications. But you have to have two consecutive higher closes. You have to have a fall-through move on the second consecutive day to suggest that there's actually any merit to the move. And yesterday's move, albeit impressive, really was telling on the daily chart. It's just a dangling, a reverse dangling participle. I don't know if we have a name for that, but really the guy was just, the bar was just in outer space, and that's essentially what happened to the buyers of the market yesterday. They were in outer space, and obviously it's come back down to earth. We'll take a look at the daily chart, but that's a daily look at from a free informational day trade. You definitely want to be selling here, even though we have some systems that are long. In fact, as I look at the black portfolio, we're net long 2 contracts. We have 3 short mini S&P 500s, 3 long mini Russells, and 2 long mini Dows. So essentially, we're net long the market right now. And but from a discretionary perspective, that's the matte black, about 50 systems. From a discretionary perspective, it certainly looks like the bears are in control. You have the trend, you have lower highs. If you get this video, sell short the market. It's now about 2:30 Eastern Standard Time. We could argue Eastern Daylight Savings Time, but we're going to go ahead and look over at what are we going to look at? We're looking for, there's a chart of the daily. So it's a daily chart of the S&P 500 cash market. We had been mentioning, well, there it is in black and white, the very strong resistance around 1340. Boom, resistance. That was your new trend. Boom, bullish failure of the bullish formation. Boom, 1340 still at 1340 there. 1340, not really particularly that significant, save until you get over to these 2 lower highs. This was lower high. Yeah, you're going to get your trend lower, but the blast higher that we mentioned last time, actually put on a lot of short exposure there. Very profitable day we had on this day. This ET sell signal we mentioned come down to retest the be all end all of key trend following support resistance measures, and boom, we've got a nice bounce. But essentially, even though we are bullish on the market officially, we've had a nice run back into resistance. So you definitely wanted to be taking your profits here. If you went long down at the key measure, this carries a 50% weighting. Now, for our intents and purposes, we generally lose, and we actually lost money on this fall through. This is the second day fall through that we're talking about, because we had some discretionary short exposure here. Because for our intents and purposes, we follow these two key measures, but we definitely take significance into this, but did expect at least another retest. But boy, the market just blasted and proved us wrong, blasted to the upside. Having said that, we're going to have the same discipline, and that is to sell short, and to even though we're officially bullish, and to certainly take profits if you were long on the blast higher from a momentum perspective. As you can see, short-term bullish and now intermediate-term bullish. So that's 3 to 6 weeks out. Intermediate-term bullish now in terms of directional movement. Short-term bullish has been the case since we've seen this leg higher right here. Again, actually that was the first day, but there was a continuation move of the day prior, just not above our technical level. So this was the one that stopped us out. 0741. We're now about 30 points higher than that, or so, a little bit more. So, how have our systems been doing? Let's quick look at the daily market. Now, going forward, you definitely want to be buying, again, for our intents and purposes, this key convergence level right here, 1311 to 1324, so we'll call it 1320. There's not much downside potential. We'll probably get a spike down to 1300 to 1310. You definitely want to be buying that. That's not to say that the significance of this bearish resistance is not going to come to the fore and force the market down there. So we're really just going to watch the market get a break above 1360. That could be impressive. We have kind of an errant move right over here. Actually, we're going to look at the MRSEM. Speaking of errant moves, look at that. This is a spaceman. This is his helmet. This is the spaceman. We really did not expect, even though our key MRSEM has been long, amazingly so, from 54. Once it got up to 1,000, that it's certainly stretched. But getting that extra profit was just, it's just, you couldn't even believe it. And now we're back down to earth at ground level, and that's relatively speaking, because look at this run. So anybody trading discretionary definitely has taken profits around the very round level of 1,000, but the MRCM continues to put up amazing gains. And this, of course, is a pretty key component of some of our portfolios, but it's actually a reserve system, I believe, so it's not accessible to all portfolios. That's the MRCM. We'll go ahead and look over here at the new ES 30M. Just went long, again putting up winners, as you can see right there. Look at, it's going to be a beautiful head and shoulders formation if this resistance holds around here. But this is back to the long side, 40, 34.25. So there's a free trade for you. Go long 34.25. But that's about a 1.5 out of 3 stars because of this monstrous level of resistance. Look at all this resistance here. So you definitely want to take that trade with a grain of salt. Nevertheless, we do follow our systems. Going to go ahead and minimize that. Look at this beautiful swing system 5.0. Now this is a very key component of almost all of our trading models. Look at this winner that it just booked, 11,917, basically 500 points or so in the YM contract, and actually back to the long side again at 12,500. Was up particularly impressively just the other day. We're going to go ahead and look at the EQ on that one. 20,000. Oh, that's pretty nasty maximum drawdown, but of course that occurred right there. It was an errant time in the. If you look back over here, almost straight up. Ever since then, almost straight up for the swing system 5.0. We can actually pull up the EQ on ESM 30. This is going back a few years, I believe. $215,000, $25,000 portfolio. We can look at how it's done. Again, take out one errant move right there. So over the last 3 years, it's done particularly impressively, particularly nice. Has been the ESM, but we actually wanted to look at the MRSEM right here. See how that's doing. Wow, just continues to go straight up. Of course, we mentioned this in almost every video. We mention these key systems, and this is actually not accounting for the detail trade, which is about another $6,000 maybe or so. $4,500 for this latest trade. $4,500 per contract on this latest trade for the MRCM. But moving on forward, so it's been a very quiet week for the we can actually go ahead and minimize that. There we go. It's been a very quiet week. Now, the MSAUDT, which we mentioned oftentimes, is still in the lead. We mentioned these three, the Master, Delta DTS, and MSAUDT. The venerable and long-running MapDT, the original version, is running at 76%, coming in third place now, overcoming the Master, which doesn't trade very often, but when it does, it trades well. For sure. So as of Thursday, yesterday, over the last few days, this was as of close yesterday, 120% for the MSAUDT. Definitely a great portfolio to get involved with, that or the Delta DTS. Now, of course, this is based on 15,000. As mentioned often in these videos, you can trade this with $10,000, and that, of course, will make that 150, 7.65% gain in less than 120 days for these portfolios over the last. Not sure why that reads 111. That's a little bit of a typo, so that should be 7. In terms of dollars, if you're just seeking dollars, 100,000. Obviously, our bigger portfolios are going to put up the most dollars. But look at this, 35,000 to the Delta DT, putting up $25,000 almost in less than 120 days. $25,000 if that's your thing. If it's not a percentage basis. But again, it's been kind of a quiet day. Here's Thursday, 5%. The Q Trader was the leader at 4.6%. Yesterday, so not bad. The day prior, very quiet, just 1% gain for the Matt Black portfolio. And again, the leader was TTTHR and DDTDS, both with 5% gains. And coming in third was the TTT 2.0. So those are interesting. Those would be leading. So Tuesday, again, very quiet day coming off of the holiday. And this, of course, is just tracking based on the fact that the markets are actually open. So if you have any interest in these portfolios or any questions at all about setting up a fully automated auto trading portfolio, you can certainly go to the website. There it is right there, MiniAnalyst.com. If you're not watching this video at the website, if you are, you're already here, then you can just go to these portfolios and select right there, MSAUDT for example, and that should be coming up. There we go. Just $588 for a whole quarter for a $10,000 portfolio, MSAUDT, and you get 6 systems, 6 lots across 6 systems. So if you have any questions, feel free to shoot us an email to admin@MiniAnalyst.com or go to the website, chat with support team, ask an analyst, and hope you guys are enjoying your trading, and we'll see you next time.